Hi traders, this is TradeAlerter from forexsignals.com on the 12th of September 2014. Listen, today we've got some data coming out from the US at 10:30, so in about 2 hours, which is the US retail sales. Now this could lead to a bit of market volatility. It is expected to be strong, which is probably going to help the US dollar. But given the price action so far, any sort of weaker number or just spot on number may lead to a little more short covering, as I think this is going to be the case ahead of next Wednesday's FOMC. The market's run ahead fairly sharply here, and that US dollar buying with the event risk is probably going to start to lead to a little bit of profit taking. And considering that the euro is so short as well, a little bit more profit taking there back towards that 130 is probably going to give us that good opportunity to sell into. The other thing that's going to be happening over the weekend is another poll from the Scotland vote. So the YouGov vote is usually the one which is moving the market here, and lately it's the last one that came out yesterday showed no winning 52 to 48. Still not back to those levels that we saw a month ago, but helping the pound rally, and it's much more evenly poised here. All right, so into the weekend, unless we get a chance to sell today just for 163, I'd be neutral. Yeah, and if we sell today at 163, you probably want to be taking profit by the end of the day, any sort of pullback that we get there. I think the market's quite happy to be at 162.50-ish or 162 into the weekend. This number here gives us an ability to move 100 pips based on that Sunday poll. What else is going on in the market? We're seeing the Aussie dollar continue to fall. We've been talking about this in the last few days. The Aussie dollar is under pressure as the market is focusing on this commodity currency sell-off. And look, it's picking up steam, and we may be testing 90 cents next week. If you look at the weekly charts, you can see the sort of moves that the Aussie does when it starts. A big candle like this usually leads to more selling. All right, so it doesn't mess around. It's been in a trend here for around about 6 months, and just this week we've had a bigger move than that whole range trading. So if you look back at the previous time we've had sell-off like this, it usually doesn't get a retracement. Right, so I'll be looking for 90 to be the immediate support and 89.50. Okay, but those looking to buy and hold here, just be a little bit careful that you have to be tactical in this particular pair if it's going to follow the similar sell-off that we've seen in the past. The positions get so wound up, so long, especially on pairs like the Aussie Yen and the Euro Aussie shorts, that this type of unwind can be quite drastic. We haven't got the catalyst yet though, and maybe the Fed won't give us that catalyst, but the initial reaction is that sort of move which would start that impulsive move long. Right, so just be a little bit careful. That being said, one of the other pairs which I'm going to be looking to play on the long side is the Kiwi as it gets lower here. Now it's nearing its 80 cents level. It's got down to 81.50 so far. Now the Kiwi, the one I'm looking to sell it against is the Euro, which is another very weak currency at the moment. And so the Euro Kiwi is back towards this 158 level, which has provided a lot of resistance in the past. So far it's held. I don't think it's probably the right time to sell just yet. We may see another leg higher as that Aussie unwind continues, and that will force the Kiwi down with it. So I'm looking for that next leg to sell into, just above the previous highs, towards 160, 159. And that seems very good risk reward over time. It's just the market will go back to focusing on something else, probably the euro weakness, unless we get a story out of China or something that can really accelerate something. The selling here in the Kiwi, it is unlikely to continue much sharper lower below 80. Aussie dollar is the one which does that with a bit more impetus. Now, if you're looking at what's the risk events going forward for the Kiwi, it's going to be the New Zealand elections next week, and then the dairy Fonterra price expectations the week after. Now those two things can move the Kiwi a lot. In the market looking for excuse to sell, we'll be able to find them there. But if we pass those two, generally unscathed, then any sort of pair, any sort of pricing, 81 towards 80, seems like a good level to get in. You get that high yield swap every day, around about 1 pip a day. So that can add up over time. And generally the people who are short, they don't want to be short if the market goes into a range trading. So once the market gets back to 80 cents, it's a bit more evenly priced in. and really you're going to have to get some sort of extended US dollar strength here or fear in the market to get the Kiwi to drop below 80. All right, so let's just see how that plays out next week. Next week's pretty critical with the FOMC, also in the Scottish vote, which is on Thursday. So you're going to see a lot of movement. It's going to be a good time to trade, but we'll be giving you updates. And if you can come to the chat room at forexsignals.com every day, we'll be there. But trade safe. This is TradeAlerter. Bye.
Nice, man. You get better and better.